save on time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Donald Trump is said to be keen on striking a deal with China in order to shore up the financial markets. The Reserve Bank of India has refused to grant any special dispensation for lenders having exposure to the IL&FS group. All defaults have to be classified as NPA after 90 days of being overdue. IndusInd Bank will be the first Nifty company to come out with its quarterly earnings today. All eyes will be on how the lender will classify its exposure to IL&FS. An Infosys board will consider a share buyback and special dividend along with quarterly earnings on Friday. The Lok Sabha approves a constitutional amendment paving the way for reservations of up to 10% in government jobs and educational institutions for economically backward classes from the general category. Boy, has that created a stir in conversations across media. Anyways, let's take a look at the trade setup for the day. Let's stick to business. And the world markets seem to be a reasonably okay place to be in if the US markets were to be looked at in trade yesterday. Not too bad. The stocks, the US dollar, treasuries, almost everything rose in tandem in trade yesterday, and it's having its impact on the Asian markets too. But essentially, the trade talk hopes leading the Dow, Nasdaq and S&P higher in trade. European markets took a leaf out of those early morning US conversations as well and news flow, because Europe too, with DAX, CAC and FTSE, had marginal upsides to themselves. In fact, CAC up almost over 1%. So it was not a bad outing for world markets. In fact, buoyed by this, even commodity markets are doing very well. Crude, for example, is the best run in the last 17 months. I think the 7th or the 8th straight day gains of gains for crude, both Brent and NYMEX. NYMEX northwards of 50, Brent very close to or around 60 as well. There's been a bit of a pullback from the kind of lows that we saw the last few days for crude, and the volatility is so high for crude that even established traders are finding it difficult. There's a story that I read on Bloomberg.com which spoke about how a Norwegian company had to rake in losses because they tried to dabble in crude and the volatility was too high even for experienced traders. So it just shows how volatile crude has been over the last few days, and the volatility has only led to some more upsides for crude prices. I don't know if this means some more downside for India or some capped upsides, but for right now, just simply because of all that's happening in the world, we seem to be doing okay for ourselves. Also because it was a third straight day of gain for the Nifty 50 as well. Remarkable. While we didn't really gain too much and the Bank Nifty did the heavy lifting, but about 0.25% higher, essentially led, as I said, by banks. So ICICI Bank, SBI, Axis Bank, all of these stocks led the gains, and we are holding above the 50-day moving averages on the daily scale as well, which only augurs positively as per our technical experts in trade yesterday. And if the Asian markets and the SGX Nifty is to be believed for today, we'll start off in the green again. So a consensus green, or rather across the board green for the Asian markets in their session today. The SGX Nifty pointing towards some more upsides as well, and if the trade talks turn out to be positive, then hey, maybe some more upsides could come in for India and in the session today and tomorrow. But for today, of course, we'll start off in the green. I don't really want to dwell too much. It becomes very difficult these days to really talk about what the index could do any given day, because the Nifty Bank ended at the lowest level day before yesterday. In yesterday's session, it was the top gainer. So it's very, very difficult to predict what the markets could do on any given day. However, it might be relatively easy to talk about stocks which could react in the session today, because there are a bunch of them that will move around. I've selected the 4 or 5 of the most important ones. Firstly, Infosys. Now the cat is out of the bag. They have announced that they are going to consider a buyback and a special dividend on January 11th. Remember, about 15 days back, on Countdown, we spoke about this Axis, or a brokerage note which spoke about how the buyback in both Infosys and TCS is a distinct possibility. Now it's going to happen on Jan 11th. We'll get you the analysis thereof, but maybe, just maybe, the market might be a bit buoyed, or the shareholders of Infosys might be a bit buoyed by this news, so might react slightly positively today. What should react positively is DB Corp. The INB ministry has hiked the rates for print media by 25% for all government advertisements, by the way. Keep that in mind. It can't rule for the others, but the government advertisements will now attract a 25% hike from print media. So DB Corp, Jagran Prakashan, HT Media, all of this will do well. A bit later on in the show, we'll also analyze what could happen to a stock like Jagran, for example. But I remember the last time on November 18, 2013, when this announcement came out, the next day, Jagran Prakashan had a rally of about 4-5% as well. Suffice to say, there'll be a rally today. If not 4-5%, maybe 2-3%. I don't want to get into a guessing game, but this is positive news for all of these names as well. Bharti Infratel speaks of better days ahead. They say that the worst is behind them because the tower demand is slated to grow. But more importantly, in this analyst meet, they've stated that the new agreement disclosures secure future cash flows. We'll talk about this in greater detail as well. But remember, this is the crux of it. And a stock which has already been very, very active the last few days should be seeing some more upsides today. And in terms of results today, aside of the big boy IndusInd Bank, also watch out for Delta Corp and Bajaj Corp. Both of these come out with numbers today. Delta Corp would be an interesting one to monitor, and whether or not this quarter gone by, which is usually a strong quarter for them, delivers on the numbers front as well or not. However, all of this a bit later on. For now, let's tell you what's lined up on First Word today. Vishwanath Nair first joins in to tell us why the RBI has ruled out any special window for IL&FS lenders on classifying their exposure as NPAs. Bharti Infratel is confident that its star tenancy will only rise from here. Sumit Sarkar takes us through what's fueling the confidence. Double-digit earnings growth may remain elusive even in the third quarter. Darshan joins in to explain why so. And then Sumit, of course, comes back to tell us why Hindustan Aeronautics may just not be able to maintain a 40-year tradition of rewarding its shareholders. A piece of news that broke out yesterday: the Reserve Bank of India has refused to give any special dispensation to IL&FS lenders. They will have to classify the loans as non-performing if overdue by more than 90 days. Vishwanath Nair reports.
The Reserve Bank of India on Tuesday has officially rejected a request placed by bankers with respect to the IL&FS loan classification. Remember that in December, the bankers had written to the Reserve Bank of India's Governor Shaktikanta Das requesting that IL&FS loans continue as standard assets on bank books, at least for the foreseeable future, because there has been a moratorium that has been placed by the NCLT on the assets owned by IL&FS. According to the bankers, because of this moratorium, they cannot initiate any kind of recovery action. Of course, the Reserve Bank of India has said no, and any assets that are due for more, that have been in default for more than 90 days will be classified as non-performing assets by the banks, which is likely to happen in the December 31st quarter. Banks currently have an exposure of about 60,000 crore against IL&FS, and any kind of default in this will lead to higher provisioning as well as an uptick in the NPA ratios. Remember that IL&FS started defaulting on some of its loan repayments as well as bond repayments as early as September 2018, and has been continuously defaulting on that. In fact, in October, the government had to step in and had to replace the IL&FS board with a government appointed board that is being led by veteran banker Uday Kotak. As far as some of the other requests that banks had made, the RBI has been mum on that, especially on the request made for easing the February 12th circular, where the RBI requires banks to address defaults on the first day of default rather than wait for 90 days for it to become an NPA. According to the bankers, they should be given a 60-day leeway so that they can sort of coordinate and come up with a better plan to deal with these stressed accounts. Of course, the RBI did not respond to that. They also did not respond to anything regarding easing of guidelines with respect to ATMs, as well as risk weightages on corporate and retail loans. All these things are still pending. We will know on the 17th of January when the RBI meets representatives from the banking sector as well as the Indian Banks Association what it actually thinks about some of these requests.
Okay, we'll watch out. I think IndusInd Bank would be an important to monitor today as well from an earnings perspective, whether they take the IL&FS exposure into account or not, and how they account for it could well have a bearing on what the reported numbers look like. So do watch out. Okay, the next piece is, well, maybe positive for Bharti Infratel because the Vodafone Idea merger proved to be a significant hit for Bharti Infratel, but the country's largest tower maker company believes that the worst is behind them. In an analyst meet last evening, the management assured investors that the consolidation phase is over and the operators will require more towers to meet the rising data demand. Somit Sarkar is standing by with the key takeaways from that meet. Somit, good morning. What stood out?
So they conducted this analyst meet yesterday and the management commentary was very positive for the same. Now they're expecting tower demands to go up in the coming months because tenancy exits are now largely done because the consolidation part is over and the data demand is rising. Second, what they said was the new agreement disclosures that they said in the analyst meet, which not only mitigates the renewal risk for the company but also assures future cash flow for the company. Lastly, the merger with IndusInd. Now that is largely done with only 2 approvals pending, which could actually re-rate the stock for the company, which would also lead to a rise in its earnings and would also remove the holding company discount. I'll explain all the points one by one. So the first point was the tenancy additions that is expected to come in. Now if you see in the last 4 quarters, Bharti Infratel and IndusInd saw close to 45,000 tenancy exits due to consolidation in the telecom operator space. Now as the consolidation is largely done, this risk is now over for Bharti Infratel. Now going forward, as the data demand continues to grow, telecom operators will have to solidify their network, which in turn will increase the demand for their towers, which is a good income and a good thing for the company because this was a big risk for the company so far. Now second, currently there are around 6 lakh sites where the telecom operators exist. Now this could go up to 9 lakh because of the increasing data demand. Now the company also provided some disclosures regarding its tower agreements with the telecom companies. Now according to these disclosures, operators will have to first approach the merged entity, that is Infratel Indus merged entity, for any new tower requirement for the next 5 years, and they have to compulsorily renew at least 1/3 of the towers that are expiring in a current year. Now if you see, this gives comfort on the continuity of the business for from at least the 2 key operators, and if you see in FY22 and FY23, a large part of the tenancies were coming for expiration. Now because of this new agreement disclosures, this says that they have to at least renew 1/3 of this expiring towers, which assures a guaranteed future cash flow coming in from them. Now if you see the second clause that I was saying, now that despite expirations of agreements coming in financial year 2022 and 23, telecom companies will have to renew at least 1/3 of these tenancies, which again assures a future business for the Bharti Infratel from this telecom companies. Lastly, the merger. Now Indus Tower merger now only needs approvals come from Department of Telecommunication and NCLT, which could complete in the next 2 to 3 months. Now how will this benefit the company? Now merger will save close to 560 crore annually for the merged entity because of savings coming in from the dividend distribution tax and because of some operational synergies. Now if the merger would have completed in financial year 2018, then EPS would have been higher by at least 16% to close to 15.6 rupees per share. So that is the kind of upside that will come in earnings because of the from the merged entity. And if you see in the first half of financial year 2019, if the merger would have been completed, the merged entity's return on equity, now that would have been higher by at least 265 basis points to close to 18.4%. So that is the kind of upside on the earnings that you can see. Moreover, currently if you see the structure of Bharti Infratel and IndusInd, Bharti Infratel owns nearly 42% stake in IndusInd. So there's this holding company discount that comes in because of this 42% stake that Infratel owns in IndusInd. Now this holding company discount is close to 20%, and if the merger completes, this holding company discount will go away, which could again re-rate the stock price of Bharti Infratel because this 20% holding company discount will go away because of the merger completion.
Okay, so 2 or 3 points that could actually work, some technical in nature as well and some fundamental in nature as well, all of which could aid.
Fundamental was the completion of the merger, and technical is the agreement part that they disclosed, which assures future business and cash flow coming in for the company, and also removes a big risk that was a big overhang that was there on the stock price, that is the cancellation of tenancies that have been continuously going on from the telecom operator space.
Well, so positive all round, and by the way, the stock is one which has actually done reasonably well the last few days as well. Look at this, 1 month return of about 17%, 297 and counting. Let's wait and watch what happens to Bharti Infratel today. Could start off positively. Somit, thanks for putting that into perspective. Well, if Bharti Infratel is leading the pack on the bourses, nothing to say that that is the one that will deliver on earnings. In fact, let's talk about earnings. Volatile commodity prices, currency swings, a liquidity crunch triggered by IL&FS, and political and regulatory uncertainty. Corporate India had a barrage of headwinds to deal with in the October to the December quarter. How will they shape up in terms of earnings for these companies? Darshan Mehta standing by with the overview of what can be expected in quarter 3. Morning, Darshan.
Good morning. So basically, we'll just take you highlights of what happened in Q2. Q2 was rather weak for corporate India. If you're looking at the earnings that came out, pretty much the weakest in the last 5 quarters, because if you're looking at it, you see the red line, and this is the number of weak earnings. So 16 out of the 50 were weak earnings, majority were in line. So if you take a look at what happened in the last 5 quarters, Q2 was a weak earning that came in. Now, if you're looking at the trends, what happened in terms of even the EPS, the first quarter was 114.3, and this was only on account of a big loss in SBI. If this was not there, this would have been in excess of 120. Second quarter was weak, 121.4. And finally, what are we expecting as far as this quarter is concerned? So when we started third quarter, that is 1st of October, it was 135. When the earnings season ended, that is November 15th, that time it was 137. The current EPS estimate still remains at 138. So this time around, there is expectation that, you know, after a weak Q2, Q3 will probably will be slightly on the better side. So that's the trend that we are seeing in as far as the Nifty is concerned. A couple of factors. First of all, take a look at crude and commodity, crude as well as currency. Those are the 2 important factors that we need to watch out for. If you're looking at crude actually managed to rally and then again move down to levels of 68. So crude on a YOY basis, you know, will be much higher this time around, but on a quarter-on-quarter basis, it will be lower. So for companies which report a QOQ number, like the oil and gas companies, they will benefit. Some of them will definitely benefit, but for input cost, there will be definitely an increase. And if you're looking at the currency, and these are all average prices that have moved from levels of 64 right up to 72. So even if you take a look at the recent correction that's come in, on an average basis, still from 70, it's gone up to 72. So the tailwinds for IT company and pharma company will still be there for certain of the companies. So that's something that we need to watch out for. Some of the common factors, first of all, monthly auto sales does indicate that, you know, there is been a big slowdown that is there. So the auto company will discuss in detail. Festive season was something that, you know, wasn't they will show growth, but nevertheless it wasn't as better as what was expected to be. And the third key trend that you need to watch out for the overall earning is that banks, corporate and PSU banks probably may outperform the NBFCs this time around.
Okay. So if we look at this sectorally, Darshan, which ones are better placed to report strong growths and which ones are likely to witness a slowdown? Yeah,
so basically let's divide it up among sectors. First one is the agri sector. UPL is the only one, but if you take a look at the entire sector as such, there were adverse climatic conditions in India, and that is something that will impact. So export players' focus will have a better edge this time around. UPL, I think LATAM did extremely well, and that is something that will benefit UPL. The second sector that we want to talk about is the automobile sector. You saw the monthly sales numbers that have come out, and it's been disappointing, and that will definitely impact. Discounts have been deeper, commodity prices have been higher. Auto Ank also will come out with weak set of numbers, because what you're seeing with the Class 8 truck sales that are coming in, lead and rubber prices have corrected. So watch out for some of the battery companies and tire companies which could probably outperform the mainstream auto and the Auto Ank companies. So that's the auto number for you. As far as aviation is concerned, there will be strength because of the holiday season, and ATF price cuts will definitely impact, and so operationally Jet this time around is expected to come out with, Indigo is expected to come out with a profit. Jet and SpiceJet, the losses may narrow this time. The other sector is basically the financials. We are seeing a pickup in bank loan growth. There is moderation in NPAs, lower credit costs, larger treasury gain. So that's something that will do well. Corporate-facing banks again probably may outperform the retail-facing banks. So ICICI as well as Axis Bank is something that you'll watch out for. Again, you'll watch out for IndusInd Bank and Yes Bank because of the NPA issue and how much IndusInd will report in trade today, the IL&FS exposure, and real estate slowdown may hurt the housing finance companies this time around. The next sector that we want to talk about is capital goods. Order book has been good. So the past order book is something that will drive execution, but this time around the order inflow has been weak. Interest costs remain a concern, which will actually go ahead and impact the working capital. Margins no doubt may improve on execution this time around. So that's capital goods. Cement again, single digit volume growth this time around, lowers average selling prices, weak weak pricing power, so it will be a weak quarter for cement. Let's get up the next sector that we want to talk about, and that is the consumer focus. There will be moderation in the FMCG growth. No doubt the volume growth won't be in double digits. It will come down significantly. It will be festive season for paints. Paints probably will do well, and cigarette companies will do well. So that's the trend on the consumption play. Some other stocks, IT, there is cross-currency tailwinds that will come in. Organic growth will be good this time around. They don't see any. There will be slight pressure on the margins because Q3 is seasonally weak quarter for them, and no guidance change is expected this time around. So that's IT. The other is oil and gas. A sharp fall in crude prices will impact businesses, some of the oil marketing companies. Lower gross refining margins and inventory losses will come in for the oil marketing company. The other track factors that you need to watch out is a metal. Base effect will come in for both the ferrous and the non-ferrous. There's correction in base metal prices, and China slowdown is something that will impact. So it will be a weak quarter for metals this time around. Pharmaceuticals, again, competition and pricing in the US will definitely be there, and high base due to GST restocking again will come in as it was in the second quarter. So probably it will be a weak quarter. And finally, telecom continued ARPU down trading is something that we are seeing, and exits to hurt tower companies. Again, there is a significant amount of competition. So telecom companies, probably it will be a weak quarter this time.
Okay. Darshan, thanks for putting that into perspective. Well, that gives you a brief lowdown of what the quarter is expected to look like. And of course, you can read more about this on our website, bloombergquint.com, as well a bit later on. The last piece on First Word today is on Hindustan Aeronautics. It may not pay any dividend to its shareholders for the first time in at least 40 years. The country's only airplane manufacturer, which has been in the news recently for not being chosen by Dassault as its partner in India, has had to take the bridge loans to meet expenses. This despite a steady order flow. Sumit Sarkar is here to take us through AL's financials. Sumit, ironic that it might only hurt its biggest customer, which is for the government.
Yeah, if you see. Now, two reasons why Hindustan Aeronautics is facing a cash crunch currently. Now, first, they are not receiving any funds from the debtors, which in this case is the Indian Air Force, and second is the depleting cash balance. Now, if you see the receivables, that was highest at least since 2012, that is highest at least in the 6 years, while their cash balance now in the first half of financial year 2019, that was the lowest at least in the last 16 years. Now, these are the two main reasons why they have been not able to repay the debt. Now, if you see that receivables, they have been continuously increasing from financial year 2017. In financial year 2017, it was close to 4,200 crore rupees, which went up to 9,845 crore rupees in the first half of financial year 2019. While the cash balance now, in the first half, it stood at close to 725 crore, which is the lowest at least in the last 16 years. And you can see in this chart how the cash balance has been depleting from close to 17,671 crore in financial year 2015. It has now come down to only 725 crore rupees. Now, that is because of these two reasons, they had to borrow close to 960 crore rupees. However, this is not the first time that the company has borrowed funds because of these reasons. Now, there have been issues in receiving money from their debtors, and that's the reason they had to borrow funds in financial year 2018 also. Now, from the annual report, we got this data. Now, in financial year 2018, mid-year, they have borrowed close to 4,447 crore rupees in the mid-year. Now, these were all short-term debts that the company had taken in the mid-year, and of this 4,400 crore, they repaid close to 3,800 crore in that period. So, taking a short-term debt is not something new for Hindustan Aeronautics that we are seeing currently, but this has been done because of the rise in receivables and because of the depleting cash balance. Now, why the cash balance has fallen so drastically in this year? Now, if you see, the payouts in the last 4 years, that is from financial year 2015 to financial year 2018. Now, on an average, the payouts in these 4 years were close to 2,200 crore rupees, and that is because of two major buybacks done by the company. Now, in financial year 2016, the company did its first ever buyback, and that's the reason you can see the spike in the payout that we have seen. Now, in financial year 2016, they did a buyback of close to 4,200 crore rupees, while in financial year 2018, we can again see a spike compared to financial year 2017, and that is because it paid its highest ever dividend in financial year 2018. Now, in financial year 2018, the company also did a buyback, but that was before listing, which means that all the money that they got from that they used for buyback was given to the government of India. Now, because of this reason, now in this 4 years, you can see how the average payout has been higher at close to 2,200 crore rupees, which is nearly double of the average payouts that we had seen in the previous years. Now, if you see from FY11 to FY14, the average payout was close to 850 crore rupees, which spiked up to 2,200 crore rupees in the next 4 years, that is from FY15 to FY18. Now, because of this, the cash balance depleted in the first half of financial year 2019 to close to 725 crore rupees. Now, mainly because of these two reasons why these issues have been coming up now for the company, and now they are facing a severe cash crunch because they are not receiving payments from Indian Air Force, and their cash balance has now depleted to close to 725 crore rupees, and they have various payments coming in. But if you see the outlook for the company, now company is optimistic and they're expecting their cash flows to improve by March 2018. That's what the company has said in the official Twitter handle, because they're expecting payments to come in from Indian Air Force by March 2018. And they're also, if you see their revenue outlook, that is also positive for the company, because the company's total order book was more than 60,000 crore rupees, and that gives us a good revenue visibility for the next 3 years. So from revenue point of view, the outlook is very positive because there's a revenue visibility of the next 3 years, while from cash flow point of view, the company is expecting that to improve by March 2019.
Wow. Okay. Sumit, thanks for joining us and giving us that perspective. Really appreciate. And while Hal may be flying into rough weather, we hope that you fly into some very sound waters today, Sumit. Wishing you a very happy birthday.
Thank you. Thank you.
All right. That's all that we have on First Word today, but lots more lined up for you on Indian Open. We discuss markets and macros with Prateek Agrawal of ASK Investment Managers. Talk about the continued real estate slowdown with JC Sharma of Sobha Developers. And while road construction may have touched its highest pace in 4 years, we asked Vinayak Chatterjee of Feedback Infra if the investment cycle is truly picking up. But after this break, a full tilt towards the day's trade.
What started out as a quest for good coffee has turned into a single estate specialty roast coffee connoisseur's paradise.
It was purely, this is something that we want. We're looking for good quality coffee.
Theirs is a story of starting something amazing and new and refreshing.
It wasn't just Nat and me who were taking this journey to change the coffee landscape in India, but it was actually going to start from the farms.
The face of coffee in India has seen a sea change in the last few years. And it's owed now in a small way to Matt and Namrata, the founders of Blue Tokai Coffee Roasters. Watch their exceptional story only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Hello and welcome. You're watching Indian Open right here on Bloomberg Queen. To hop across to Asia to see how we're faring at this point. It's a strong day at the start of it today. So the entire Asian market basket with heavy gains of more than 1.5% to about 2.5% for the Hang Seng, which is trading now at 26,494. For SGX Nifty, you are seeing the gains coming in, but not to an equal gusto like the rest of the Asian market pack. But we're not complaining. About 0.8% higher on the SGX Nifty. For our markets, yesterday's session particularly was interesting because the second half of trade is where all the action was, and in the banking space, much much of the action translated to push the index higher.
It was interesting, wasn't it? The day before yesterday, the Nifty Bank ending at the day's lows. Yesterday, it was leading the markets higher. And today, one of the banks comes out with numbers as well. So
yeah, IndusInd Bank.
Banks firmly in focus.
Yeah, and the two big heavyweights actually, SBI and ICICI Bank, leading the charts with 3.5% gains individually. So that really helped the index itself move up further. But on the futures and options side, what's it looking like, Agam?
Well, actually, there's been very little change in the Nifty futures. By little, I mean none. And you will see that in the change in OI. It's 0.00%. So we really haven't seen any movement with respect to the Nifty futures. The Nifty banking futures, however, has seen a significant addition in open interest towards longs, even as its open interest rises by nearly 29%. The India Volatility Index came off by around 4% yesterday at around 15.7. And this is going to be crucial considering the writing of options that we've seen across various strikes. But the range as far as your open interest distribution goes remains the same, with the 10,500 put with max OI and 11,000 call on the upper end. In terms of changes in OI2, what we've seen is writing around the 10,700 put and unwinding in the 11,000 call. Let's talk about your stocks, and Adani Power and Jet Airways are the ones which remain in the F&O ban. And moving on to your put call ratio, your Nifty put PCR stands at around 1.41. Nifty bank put call ratio edging higher at around 1.3. And in terms of stocks, I'm keeping an eye on something like a Kaveri Seed Company, which saw fresh shorts. ICICI Bank saw fresh longs. In terms of unwinding, right at the top of the list, we have ICICI Prudential, which has actually seen short covering, and it's the same for Bharti Infratel. Keep an eye on Bharti Infratel because that one is moving from strength to strength, and we've seen significant movement here, nearing at around 300 rupees per share. So we'll be watching out for that as well.
Okay, Agam, thanks very much for that. That's the futures and options wrap out for yesterday's session, how we set up for this morning. Bringing in Gurmeet, Chadha, CEO and co-founder at Complete Circle Consultants. He's joining us on the show right now. Good morning, Gurmeet. It's going to be banks all the way in focus, at least in today's session, after yesterday's pullback that we've seen in the strength in the bank Nifty, led by ICICI and SBI, and also IndusInd Bank because it reports its Q3 numbers today.
Hi, Deven. Yeah, I think there would be, I think what we need to probably watch out for is the, especially with IndusInd, declaring numbers today, is the IL&FS, event development which happened yesterday, where you probably will have to show it as an NPA. They did some provisioning last quarter. I think it was 25%, and there were some disclosure issues because which the stock was also under pressure. So it would be interesting to see. I think the other thing we'll probably see is the CV sales and the spreads there. I think the numbers have not been too great on the CV side as well. So I think these are the two things the street will watch out. ICICI I think would probably continue to do better. I think since I was tracking some numbers, and since 2012, I think it's the first time it has outperformed both the index and the bank Nifty. So that still continues to be the top pick in that space.
Gurmeet, so am I understanding this correctly? If you were to go out and make a fresh investment in the banking space right now, you would go out and choose an ICICI Bank over the others?
Neeraj, yes. Obviously, there's been a good run up, in the price, and some things are probably getting factored in. So ICICI with HDFC Bank, because HDFC Bank is something which you possibly you can lose time value if you get enter at a higher price, but that's something which is more secular. So maybe ICICI and HDFC Bank and Kotak. I think this RBI issue of Kotak should get resolved. The way the Bandhan and group thing happened, I think something on Kotak front could also happen, which could also lift. So in that order, it will be ICICI, HDFC, and Kotak.
Interesting. Okay, Gurmeet, one of the stocks that we spoke about earlier was Bharti Infratel. I don't know if you got a chance to look at the analyst meet takeaways, but they seem optimistic on a number of counts. Some fundamental grounds, of course, or largely fundamental, but a couple of technical triggers as well that come in because of the discounts going away, etc. So on. What did you make of this? And what does it mean for a stock that's already gained 17% in the month gone by from an investment opportunity perspective?
So Neeraj, again tactical there, and I think that the deal with Indus is also going on for some time. It will be interesting to see that as well. I'll be more, in fact, positive on Bharti because of the fact that they'll be deleveraging because of the Bharti Infratel sale and also the Africa IPO. And I think the ARPUs are very, very low. I think at 100 rupees, 105 rupees, they are too low. Considering the kind of data explosion we are seeing and consumption we are seeing, we just have 3 players broadly now in this space. I think sometime, the pricing power should come. So deleveraging and along with improvement in ARPU, I'll be more positive on Airtel looking at how cheap the valuations are.
Right. Aside from that, Gurmeet, yesterday and the day before and probably for the last few days, it's been a powerhouse for real estate and prominent names like Godrej Properties, Oberoi Realty. These are the names that are standing out. Are the winds of change pretty visible for real estate now, or you're still going to be a little bit more cautious?
Deven, I'll still be a little more cautious. And it's not a homogeneous space, because it's like few pockets doing well. So if you look at residential, Bangalore was never an issue. So something like a Sobha was, you could have added that on dips. NCR, I think, continues to struggle on residential. Commercial, obviously, is slightly picking up. So if you were to ask me, and if I were to really, put some bet on something, could be you spoke about Godrej Properties. I think that could be one. DLF, I'm seeing some better. So I've been speaking to some senior people there. Happen to be some of them being my, I know them from my banking days. It's Q3 has been a little better. The rental flows have been a little better. So if I were to pick one thing, probably it would be Godrej and DLF. But should still be cautious on the entire sector recovering and doing well as of now.
Okay. Stay on, Gurmeet. So much more to talk about, and we'll talk to you in detail about those other things as well. But let's take it to a research team to try and figure out what are the key stocks that you should monitor in the session today. Some brokerage notes as well as a preview of one of the largest or the first of the Nifty names to come out with numbers. Somit, Darshan as well as Nikki join in for that. Good morning to all of you. Nikki, good morning. Let's start off with you first. The key stocks in news today.
I'm going to be starting off with Tata Steel because it's come out with the Q3 updates where it's spoken about the sales volume, which doesn't seem like a pretty picture. 9% downtick, we're looking at the standalone numbers. I wouldn't read much into the numbers. The commentary essentially says that a weaker demand from automotive segment, that doesn't augur well for the company as a stock as a whole. We're not looking at pretty numbers, at least for Q3. Separately, the company said that it's going to be in talks. The Bloomberg report suggests that the company is in talks to sell Southeast Asian asset business to China's He Steel. Now that's not a big, would not have a big impact on the financial. Contributes to around 1% of the consolidated EBITDA. NMDC yesterday, the board has approved a share buyback of more than 3% equity at a price of 98 per share, which indicates a premium of 2 to 3 odd %. Infosys separately is going to be considering a share buyback and special dividend on Jan 11th. Yes Bank, the board is expected to meet to select a new MD, CEO. That's one development that we like to keep an eye on. Apart from that, we're looking at Jet Airways, where a Mint report suggests that the bank has proposed a $900 million turnaround plan for the company. And we're looking at these print media stocks like DB Corp, Jagran Prakashan and HT Media, where INB Industry has hiked the advertisement rate for print media by as much as 25% for the period of next 3 years.
Okay, watch out for Jagran and the likes. Some of these could react. The last time that this hike happened, I think, was November 18th, 2013. The next day, Jagran Prakashan as a stock went up about 3.5%. Not to say that the same will happen today, but do watch out. Nikki, thanks for putting that into perspective. Some key brokerage notes as well today, Somit.
Well, the first one is on Bharti Airtel, where CLSA has maintained its buy rating and has hiked the target price on Bharti Airtel to 425 from 415. Now, according to the brokerage, now they have a buy rating on Bharti Airtel because the consolidation in the telecom operator space is now largely done. They are expecting the average revenue revenue per users to increase going forward, and because of the deleveraging plans that Bharti Airtel has, and because of its inexpensive valuation. Now, the brokerage says that Bharti Airtel has been able to defend its market share despite the aggressive competitive intensity that we have seen from Jio, which is very commendable and a big positive that is for Bharti Airtel. Now, they're expecting Bharti Airtel's market share to remain stagnant, but which is again a positive, and that is because of the growth that we have seen in its data subscribers, and that is what will help Bharti Airtel to maintain its market share. Now, if you see, the brokerage is expecting the company's EBITDA to grow at a compounded annual growth rate of 19% over FY19 to FY21, and it says that given this growth rate that brokerage is expecting, the valuations are very inexpensive for Bharti Airtel, and that's the reason it has a buy rating on Bharti Airtel. The second we have is on Tata Elxsi, where Motilal Oswal has kept the rating under review for Tata Elxsi. Now, earlier they had a buy rating on the stock with a target price of around 1200 rupees, but yesterday, post the results of Tata Elxsi, the Motilal Oswal has kept this rating under review. Now, they are saying that the fall in the dollar revenue growth is very disconcerting for the Tata Elxsi. Now, they are saying that the recent trends that they are seeing in Tata Elxsi's revenue growth, now they have raised concerns about the sustainability of the valuation multiples of Tata Elxsi. Now, it also says that to give a rating on the stock, they'll have to seek more clarity on the business outlook from the management of the company. They'll also have to see the segmental traction, because these details were not given by the company, and they'll also have to ask the management the causes for the recent slowdown that they're seeing in Tata Elxsi's business, and that's the reason they've put this rating under review currently for Tata Elxsi.
The note spoke about a couple of concerning points with regards to long-term revenue trajectory as well. Should be interesting to see what the Tata Elxsi does. It was very volatile in the session yesterday, ended flat. Let's see if there's some downsides today. We'll also watch out for the earnings season, Darshani. We are talking about the entire space. But let's start with IndusInd Bank.
Yeah, so IndusInd Bank, I think more than the NI growth, it will be what's happened below in terms of asset quality that will be important. But we need to watch out. NI is expected to grow by 25%. Again, the Bharat Financial inclusion estimates have been included this time around. So that's the top line growth that you're looking at. On the bottom line, we're seeing a degrowth of almost 13%. So 810 is something that we're looking at as far as the bottom line is concerned. Provisions in the third quarter will lead to profitability issues, and that is because of the IL&FS exposure. IndusInd would see a spike in provisioning given the exposure it has to IL&FS, probably, and they might declare it as an NPA. NIMs are expected to stay flat over the last quarter. Non-interest income will grow, aided by healthy fee growth. There is also benefit from third-party distribution fees, treasury gains, so that all is good. Asset quality may see a gradual increase on the lower side. A deterioration is something and details of the merger with Bharat Financial is something that will be keenly awaited.
Okay, we'll watch out for all of this as well. Thanks a lot for that, Darshan, Somit, as well as Nikki. Gurmeet, can I come to you on the print ad companies? Now, typically you would believe that the 6 months in the run-up to the election should be great for the regional print media. It was not the same in 2000, in the previous election year, of course, 2014, by the way, because there was some marginal upsides to Jagran maybe. But this 25% ad rate hike, do you think you would go out and buy any of these names because of this development?
So Neeraj, yes, I think this could be a trigger to as I said, its business is very, very cyclical and seasonal, and I think typically first half of the calendar year, not the fiscal year, is usually better. As the year starts for media companies, which we have seen. So I would probably, and as I said that, every election in India is a mini QE. So you see more spends, more consumption. So, I think the overall consumption theme should come back in focus across, whether it is media, whether it is, fast moving electrical goods. Some of the auto names after this transient phase, passes. So overall positive, and considering that we have had a healthy price correction.
Right. Anything else, Gurmeet, that you are particularly keenly watching out for from the earnings this time around? Anything where you expect there could be more surprises? Because we have seen volatility on the back of currency, commodities taking center stage this quarter, metal prices coming off, crude prices coming off. So that's going to have its implications individually on what these two sectors do.
So, Deven, I am of the opinion that when you see volatility in prices, it leads to more inventory losses than gains across, because it becomes very difficult to, take forward covers, and we have seen that, so whether it's currency, whether it is crude, I think I probably have to be a little watchful in where the earnings come. A few spaces I am very, positive at a broader macro level is that if you see the liquidity is improving. We've seen two big NCD issuances coming of Shriram Transport and Mahindra Finance. If you see the yields, they are at about, for Mahindra, it's about 920, Shriram is about 940, 950, which is lower. And these are all like 5-year, 10-year, some of the NCDs. So, NBFCs with good parentage, good track record are now able to probably get on with the retail issuances and raise long-term money. Also, I think the liquidity situation is improving. So I'm extremely positive on a fast-moving electrical goods space, which to me is a very, very secular story. So something like a Havells, to me, after some of the, some price correction, looks extremely attractive, despite the valuation still being rich. So you take switchgear, you take wiring, you take lighting business, you take consumer durable. In all four spaces, it is in top 3, as one of the dominant players. And just to give you an idea in terms of the distribution reach, it has more than 1 lakh outlets. The Lloyd acquisition has given another 10,000, display points. So, distribution network in India is something which is very, very, not discussed too much. So just to give you an example, Lever in India has 10 million outlets where it serves. And it's very difficult to match that kind of a strength, and you'll see what it will do to GSK brands over the next 3 to 4 years. So distribution reach in India. Look at even Hero Honda, despite not much innovation, but the kind of a dealer network it has, it still commands, a significant market share. So to me, that's a very, very big differentiator. So Havells is one idea which I'm extremely positive on.
Okay. Got that. That's some of the ideas that Gurmeet is closely watching out for. On to our technical experts then. Gaurav Bissa of LKP Securities is joining us on the show right now. Manoj Vayalar is also here with us. He's the equity derivative strategist at Religare Securities, joining us on the show right now. Both of you, thanks very much for taking out the time. I'll start off with you, Gaurav Bissa. Your trade on the index, and particularly what you would do with the Bank Nifty now after yesterday's strength.
Good morning. The strength for both the indices is again quite strong, and we have been quite positive for Nifty as well as the Bank Nifty. Nifty has resistance at levels of 10,900, 920. This is the level where we have seen time and again some amount of pressure coming up. It can move towards those levels. For me, it's a buy on dips market. 10,800, 10,790 is actually a strong support for the immediate term. So any dip towards 10,800 can be bought into, but a 40-point stop loss on the upside, 10,900 would be the level to watch out for. Bank Nifty is more interesting. A couple of reasons for that. 27,500 call option commanded a good amount of concentration for the last couple of weeks. We have now just about closed on those levels, 27,498. So again, on the verge of a good breakout on daily charts, on hourly charts as well. I expect decent amount of short covering to come into the picture once it trades above these levels, and can then head towards the level of 27,850, 27,900, which is the immediate hurdle for that. The approach for this would be one can buy a second week, 17 January, 27,900 call option. The target for this would be around 130. The stop loss would be 75, and I expect a good amount of move coming in next 2 or 3 days.
All right. Manoj, what about your trade on the index? And keeping in mind where the maximum amount of open interest on the upside is blocking Nifty, that's about 11,000. Would you probably look at the F&O data and probably look at the 11,000 mark as being a big crucial hurdle to take down?
Good morning. Well, ideally what I feel is, I guess let's say from the last 2 months, every time the Nifty has staged a rally from the 10,200 to maybe, let's say 10,800, we have seen the concept of weighted average price, the VWAP concept working excellently well. Now VWAP is simply the weighted average of the net long positions that happens or the short covering that happens on the Nifty futures, and same goes from the upside when you see the distribution happening, so that comes as a resistance. Now we believe that 10830 roughly is the weighted average price of the entire long which we have seen, and this might see a distribution somewhere close to 11,230 odd. So there is a good possibility we are going there, but more than the Nifty, as this analyst was saying, I am more bullish on the Bank Nifty. The Bank Nifty has opened gates till almost 28,320 roughly, and the 17th Jan call option, maybe even a 28,000 or a 28,300 call option as cheap as 25 to 50, 30 odd rupees, you can buy that. No stop loss on that, you hold it till the expiry, and there is a good possibility of getting a 1:3 on that, somewhere close to 100 rupees on that. So the levels that we are expecting is 27,300 on the downside and at 28,300 till 17th of Jan. So we are positive on the ratio between the Nifty and Bank Nifty, which is currently at 2.52, can go all the way to 2.54 to 57, where there might be resistance which might be seen.
Okay, got that. Gentlemen, just stay on with us. We'll come back and take your individual stock ideas as well. But on to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown out on a particular stock or a trend that he spotted. Yash, what's on your radar today?
Morning, Devina. So we are tracking Sun Pharma on the charts today, and a buy call coming on the back of the proprietary trender indicator. Let's first try and understand what it is and how do you interpret it. Basically, it is the spread of the average true range, which helps generate a buy or a sell signal, and it also helps you manage the stop loss. How do you interpret it? You go long when the color changes from red to green, and you go short when the trender line changes its color from green to red. In the case of Sun Pharma, we saw a big up move yesterday. It managed to close 4% higher and very close to its highest point of the day on the back of very heavy volumes. So with that, the trender line over here, it had changed its color to red back in the start of November, and from the levels of 600, it cracked all the way down to 450, and now with this closing above the trender line, which is at the mark of 447, it has managed to flip its color, so we could expect upside as far as Sun Pharma is concerned.
How well has this worked, Yash, in the past?
So on an average, Devina, over the last 1 year, every time that the trender indicator has turned positive and one would have gone long on the stock, it would have given you on an average return of more than 7% over the next 1 month.
All right, Yash, thanks very much for that. That's Bloomberg Edge for you. But for deeper insight onto Indian equities, visit BloombergQuint.com, where Eskan decodes Bloomberg charts on a specific stock every day to identify the technical triggers that have emerged in them. On today's Bloomberg Edge, we feature TCS and what its open interest and volume charts indicate ahead of its earnings. That's a BQ Blue exclusive. All right, back to our guests then, and we've got Gaurav as well as Manoj here with us. Let's take a look at what their stock calls are this morning. Let's start off with you, Manoj.
Yeah, we like ITC as well because I guess the stock has been consolidating in this 278 to 284, and even yesterday, the first time it has more or less breached towards the 285 level. So we believe there is the doors are open till 320, but initially the target is somewhere close to 300. So we recommend buying ITC at 284 with a stop loss 278, and we are expecting a target of 300 odd on that. L&T Finance as well, we believe the stock is good, and we can see follow-up buying with it comes. So we advocate buying it close to 148 with a stop loss of 142, and we have a target somewhere close to 160 to 168 on that.
Okay. What about you, Gaurav?
First recommendation today would be buy on SRF. The stock has bounced back strongly from the immediate support levels of 1990 2000 mark. About 4% OI addition has been seen yesterday. Good amount of long positions are seen getting built. A breakout on hourly charts also seen. It can test levels of 2150 as well, but that would be a positional bet. For the immediate target price of 2080-2100, one can buy SRF futures stop loss of 2000. Second recommendation would be buy on MCX futures. It has been consolidating between the range of 705 to 740. It has a good breakout after this consolidation range above levels of 745. About 8% OI addition has been seen yesterday. We are seeing good amount of participation in the volumes also. The targets for this can be as high as 820, 825, but for next couple of trading sessions, one can buy with a stop loss of 732 on the upside, 775, 780 would become quite possible.
Okay, those are some stock ideas that you need to keep in mind before we start off a trade this morning. But before we go on and discuss more stocks with our technical and fundamental experts, let's take you through some of the changes that have happened in HDFC Mutual Fund. They've increased stake in power financiers in December while cut exposure to other financial players. Yash Upadhyay is here back with us for a quick look at the changes in HDFC Fund's portfolio. Yash.
Morning, Devina. So, like you rightly mentioned, they have increased their exposure to financial and more particularly the power financiers. So that plate should come up. They have significantly bought into REC and PFC. So more than 2 crore shares added in REC and almost 1.5 crore shares added in PFC. Federal Bank is the other name from the financial space wherein they have bought in close to 26 lakh shares. IT or the technology names are the other two ones to watch out for. So 44 lakh shares coming into First Source Solution, and about 6.5 lakh shares coming in to Newgen Software. On the other hand, they have reduced their exposure to the steel makers. So SAIL, they have sold close to 1 crore shares, so 93 lakh shares gone there, as well as Tata Steel, wherein they have reduced their holding by about 18 lakh shares. IDFC Bank and Ambuja Cements are the other two names, along with GAIL, wherein they have substantially reduced their holdings. But let's also take a look at which are the stocks that make their way into their portfolio for the very first time. And JK Cements and SBI Life Insurance, they make an entry into their portfolio. So 5.74 lakh shares coming into JK Cement and about 3 lakh shares coming in for SBI Life. They also bought in close to 64,000 shares in Sun TV. But what makes their way completely out of their portfolio, and there was a long list, by the way, some of the key names that stand out for me are India Cements and Capital First, wherein they have sold over 10 lakh shares. Karnataka Bank being the other big name, wherein they have sold close to 3 lakh shares. Colgate, they held close to 3,500 shares according to their previous filing, and they have completely exited from that position along with Torrent Power, wherein they have sold 24,000.
All right, Yash, thanks very much for that. A quick update on HDFC's fund and the rejig thereabouts. Gurmeet, we're going to be watching out closely, the metals pack and the auto space in particular. The last weekends, in fact, was one of the more brutal weeks for them. You had commodity prices coming off, metals as a pocket, JSW Steel, Hindalco and Nalco, Tata Steel, all gave way. Auto sales numbers not particularly promising. That's probably going to reflect in the Q3 numbers as well. Are there any standouts within these two sectors which still could be promising on the upside, and they could be value buys now since they've corrected?
So the winner on metals, you have to catch the right cycle. They can't be a part of your long-term, portfolio. Unfortunately, so I don't see the ferrous. The makers look stressed. Non-ferrous space, maybe an Hindustan Zinc or Coal India for their dividend payout can be looked at. But at best tactical. I won't venture too much and buy into metal stocks. In auto, I think these are interesting times. Good time for stock pickers to evaluate that what trend is coming off and what to pick. So in two-wheelers, and what we are seeing in auto is that there's a very high entry barrier business. If you see even the passenger vehicles, if you see Maruti, Hyundai, and Mahindra make up for almost 75% of the industry. Same case for two-wheelers as well. So in two-wheelers, Bajaj Auto looks good. 13, 14 times valued, and it has a much more diversified revenue stream compared to a Hero or other makers like TVS. So you have exports working for them. I think they had lost market share when Honda exited Hero. Last 5-6 years, it dropped from almost 25-26% to 15%. They have gained market share last year. The three-wheelers is doing very, very well. Exports we already talked about. Two-wheelers, they have invested into technology. The Kawasaki tie-ups, and the fact that they have invested not at the executive segment but just a level above that. So I think that looks to me a good play in terms of gaining market share, in terms of diversified revenue stream in auto. Also, some of the OEMs look very, very attractive. Somebody like a Minda, to me looks attractive at post the price correction we have had in this space. But one has to be a gradual, buyer in this. You could see Jan could be another soft month. Because typically people tend to buy new vehicles post 15th January. That's when the real model changes. in terms of the year. So you could have another soft month. So, maybe you can accumulate during the earnings season.
All right. Manoj, a quick take on Eicher Motors and what could one do here?
Well, we believe Eicher has some more distribution to come in, because the levels of maybe 29,600, that was where we had seen the VWAP concept work, at least for the entire trend line which has started from the last 2 years. So we would still wait for that. We believe there is a sell on rise in that. Rather, if I have to still buy something which is closer to the bottom, I feel would be an Ashok Leyland, somewhere close to 93. We believe the stock might not really breach the 88.6 to maybe an 89 in terms of bottom. So that's a good stock we can accumulate, because on the upside we feel 113 to maybe 88, that's the range the stock might trade in. So it's still advocate buying that maybe in the cash market, so that since we have another 4 to 5 odd rupees, which is a good percentage of 5 to 6% in terms of bottom, so it's still advocate buying Ashok Leyland in the cash market for the target of 113. And if it is option wise, we believe that McDowell's, there is some more distribution on the downside. So a better strategy would be you can go and buy a 600 strike put option. I guess you buy it between 15 to 17, the stop loss of 11, and we are expecting a target of 22 to 24 on that.
All right, gentlemen, stay on with us. 30 seconds left to go for market pre-open. Pointing to a stronger start this morning. The rest of Asia is looking strong, about 1.5% to 2.5%. That's Nikkei 225, Shanghai and Hang Seng, both of them extremely strong in this session. SGX Nifty 2 is holding on to those gains, about 0.75% higher. 10,917 is where it's trading at. And for our markets, going to be important to see how things stack up, particularly how Bank Nifty opens, considering yesterday's strength came in the latter half of trade. That's Nifty 50 for you, flat right now, and the Sensex up about 0.8%, but these prices will consolidate. We are comfortable above 10,800. Individual counters then, you've got Z, which is your top gainer right now on the Nifty, and that is up 3.5%. Infosys talks of a buyback by January 11th. The stock's up 1.5%, but nonetheless, you've got the earnings season kick-starting, so that's also going to be weighing in on the stock. Eicher Motors, 2.5% higher. Okay, just about 2% higher right now. Prices are fluctuating. IndusInd Bank ahead of numbers. 1596. You've got a Hindalco up 1%, Tata Motors is up 1%, Adani Ports is up 1%. Yes Bank continues to trade higher, 194 on this stock. Vedanta moves up. Bharti Infratel, again, a stock which has been doing considerably well in the last few trading sessions, carries on the gaining momentum. Reliance Industries, 1110. HCL Tech, that's 950. You've got a JSW Steel, Sun Pharma, 0.5% gains there. Remember, Sun Pharma was the top gainer of yesterday's session. Two big movers, ICICI Bank and SBI. ICICI Bank, in fact, at life high, so 382 continuing from yesterday's move, about 0.5% higher today, and SBI too up about 0.1%. For the currency, it's sort of flattish, but there is some weakness, 70.12.
The bond yield should come up on your screen as well, and let's see how they are doing in the session today, 7.53 as we speak. Just very quick mention of what the broader end of the spectrum is doing. So HT Media, Jagran Prakashan, DB Corp, all should come up on your screen. HT Media is already showing some upsides, volatile, 7.5%, but this may change as well, but it's showing some upsides. Jagran about 8.5%, so good going there. DB Corp should come up on your screen as well. Well, flattish right now, but let's wait and watch if there is some major reaction thereof. There is an unnatural trade in Barmer Lorry that may well change in due course. Also bring up what the sugar names are doing after a big move in trade yesterday. Let's see if there are some more upsides here for a Balrampur and the Araik. Well, 112 and counting, so good going there. Dhampur Sugar about 1% higher. Sri Renuka was up 6%, and Praj was at 10-year highs in trade yesterday. Let's see what that one is doing in the session today. Not a sugar name, but benefits from ethanol, 130, so yeah, extends its gains. Last but not the least, Gurmeet Finance as well as Bandhan Bank should come up on your screen after carnage yesterday. Seems like it'll start off flattish. What about Bandhan Bank? Well, up about 1% for now as well. So good going. Before I take in a final thought from Manoj Vayalar, now let's get in a brokerage note going as well. Now, Morgan Stanley has raised its price target on ICICI Bank, citing improving asset quality and underlying earnings. Sumit Sarkar is here to take us through the report. Sumit, what does Morgan Stanley have to say?
Well, Morgan Stanley has maintained its overweight rating on ICICI Bank and have hiked the target price to close to 510 from 460 rupees. Now, remember, ICICI Bank is the most preferred banking stock for 2019. Now, according to the brokerage, after a good 2018, 2019 is expected to be stronger and it remains Morgan Stanley's top pick for the calendar year 2019. Now, Morgan Stanley is expecting ICICI Bank's asset quality to improve, which in turn would improve the earnings of the company. Now, currently, if you see, ICICI Bank's balance sheet is significantly better than the previous year, says the brokerage, which would further improve in coming quarters, according to Morgan Stanley. Now, on the back of the stronger asset quality and growing net interest margin, ICICI Bank's core earnings, now that is expected to grow at a compounded annual earnings growth rate of around 20% over FY19 to FY21. Now, net interest margins of the bank would improve as its cost to income ratio would come down and the non-performing loans would also decrease. Now, lastly, it also says that the valuations are very attractive for ICICI Bank given the kind of earnings growth that they're expecting from the bank, and it also says that foreign ownership currently in the bank remains at a 15-year low.
All right, Sharma, thanks very much for that. That's a quick note on ICICI Bank. The stock is strong as ever. Manoj, before we let you go, a quick take on ICICI Bank?
Well, if it is a private sector bank, we look into the ratio the bank nifty has. The four boys, ICICI, Axis, SBI and HDFC, they contribute to more than 86% of your bank nifty. So I believe it would be more from the Axis Bank, we might get the rally more. So at 650, I would still advocate buying there because we are more positive on that. We believe that a 674 is what is very much achievable and it can be possible in the next 5 to 7 odd sessions. Needless to say, we would still advocate buying it through an option or maybe a cash market because of the M2M, generally the people suffer. So the stop loss here should be 646 on that with a target of 672 on that. I would still vouch with an Axis Bank at this point in time with respect to the relative movement that we are expecting from here on.
All right, got that. We leave it at that, gentlemen. Manoj, thank you very much for joining in. Gurmeet, we'll have to leave it at that for the morning. Thank you so very much. Appreciate you joining in. Deven Choksey of KRChoksey Securities also joins in right now with his views. Deven, thanks very much and good morning to you. How's it looking like and what are you advising clients at this point? Is the volatility still more pronounced, or do you feel that slow but steady investments are the order of the day?
Yeah, good morning. Well, we have just begun we are beginning the result season, and probably I think we are getting started with the companies today on the third quarter result side. So I think all eyes are more or less on the result season coming up. As I see it, I think in this particular result season, and where the theme is getting developed is that I think largely the companies with a discretionary consumption space have seen relatively a flattish kind of a period, and maybe I think on a quarter-over-quarter basis, I think they would have relatively a flat to weak kind of a performance coming in from their side. On the other side, I think the banking and the financial companies probably have relatively better period compared to the others. Also because of the fact that I think the public sector banks have been the beneficiary of receipt of proceedings on the defaulted companies through NCLT-led proceedings. At the same time, I think relatively lower amount of provisioning is also I think helping them. So overall, I think the banking space, the corporate banks, the private sector banks, even some of the select NBFCs, they would remain on a high credit growth period in this particular quarter. So they remain relatively more positive. So on one side, if the consumption is weak, on the other side, I think the lending part is remaining relatively more stronger comparatively. And that's where we believe that I think the result season would probably determine the trend of the market. I would think that market would be selective. It would be selective in different pockets. Probably I think we will not be seeing a particular trend which would say that I think it could touch 11,000, 11,200. Yes, I think it could. But I think to see all the stock participating into it, I think would be relatively I think far-fetched at this point of time. Maybe selective stocks participating and I think moving up from the lows at which they are quoting today. So that is where I think you see the market. No panic, no, I think we are careful about it, but at the same time, but no panic on the downside. We believe that 10,800 kind of a level could possibly hold for the time being in this result season as we start the season now.
Particularly for the banks this time around, the numbers, are we going to see the asset quality issue continuing, considering that they still, if they are lenders to IL&FS, they still have to categorize it as NPAs now?
So there would be few. I'm not saying that I think the asset quality issues are not coming in the way. I think there would be few for sure. And in such a large economy, I think if some or the other lending ventures fail, I think that is something which the banks will have to provide for. But by and large, as I see it, I think the pressure is less. Particularly, I think the corporate or the private sector banks, I think there the pressure is relatively less. Banks like ICICI, they are sitting on good amount of liquidity too at this point of time. So I think they remain, I think, relatively more stable, or call it favorable. Credit growth on the retail side is continuing to be steady for most of these banks who are focusing on the retail portfolios. So that also is, I think, helping them. And the quality of buyers or the borrowers, as far as I think the loan is concerned, is also important. So I think many of the private sector banks would probably have relatively less amount of stress on the balance sheet, because I think they have been selective about the borrowers, I think, that they have in their books. So all in all, I would say that I think you are not likely to see too much of a stress in this particular quarter on the provisioning side. On the contrary, I think the receipt of money coming through the auctioning of assets is definitely helping them to bring the liquidity back into the books and show up relatively better performance.
Okay. Individual stocks, Deven, what would you be doing now? What would you be buying, and what if it exists in your portfolio, will be making an exit?
So I think overall opportunity remains, I think, in few where we like them, those companies. We have been liking the housing finance businesses of HDFC, and we also have been liking the Bajaj Finserv, because they also have the balance sheet, I think, where they have the Bajaj Finance and the insurance companies. So insurance companies and the finance business, I think they remain, I think, stronghold for Bajaj Finserv. In the finance company, they also have the housing finance company as a separate company too. So we like, in a way, I think, the NBFC business where their balance sheet is strong, their creditability is strong, and at the same time, I think they have got relatively better performance to talk about. So from that perspective, we've been liking the HDFC and the Bajaj groups, I think, from the investment point of view. Similarly, I think the opportunity would be there in the life insurance businesses, and that's where I think we've been liking HDFC Life, Bajaj Finserv once again in this category. Select pockets in automobiles, I think we continue to find merits, likes of Bajaj Auto, likes of Ashok Leyland, where the price corrections have happened significantly, and at the same time the fundamentals of the companies are remaining relatively more promising, though I think in a particular quarter they may have the experience of lower volumes, but I think overall I think the promises are there on the business side. So Ashok Leyland, Bajaj Auto kind of company within the auto space. And likewise, I think in the capital goods space, I think we like companies like ABB and Siemens, where the performance of the business and on the business side is relatively far more stronger compared to what they were in the previous years. So we have been selective, and we continue to like selective opportunities as available in the market today.
All right. All right. Gentlemen, just stay on. We're minutes away from market opening, so let's tell you all that you need to know to stay ahead in trade today. First up, Yes Bank's board meets today to select the new managing director and chief executive officer. The recommendation will then be sent to the Reserve Bank of India for approval.
We kick off the Nifty earnings today with IndusInd Bank. Bloomberg consensus projects a 25% growth in net interest income, but profits may decline 13% on a higher provisioning. Watch out for the IL&FS exposure.
Infosys board confirms it will consider buyback and special dividends in its board meeting on January 11 when it takes up quarterly earnings.
Tata Steel Q3 standalone sales volumes decline 9% and Europe sales fall 6%. In addition, the steelmaker is said to be in talks to sell Southeast Asian assets under Nat Steel to China's Steel Group.
And lastly, Morgan Stanley hikes its price target on ICICI Bank to 510 from 460 rupees per share, remains overweight on the expectation of earnings recovery and attractive valuations.
Deven, Choksey, quick thoughts here, 60 seconds. Are you buying any of the print media companies? All of them have started off really well after the ad rates have been hiked.
No, I think the overall measure which is announced by the government is good. But considering the fact that I think they have the competition coming in from every corner, I think the digital media in particular, I think even though you are allowed to raise the rate of advertisement, I think still the important aspect is that I think you have to compete in the universe. and that's where I think the social media would play its major role. So I'm not too sure whether I would buy any of the print media companies immediately in my portfolio, but yes, I think the situation probably should be improving for them. Let there be no knee-jerk reaction. Maybe I think one will have to wait and see how exactly they end up getting the better rates going forward.
While we will say positive open to most of them, at least from a technical point of view, Gaurav, have you been tracking any of these media companies, and what have the last few days of trade looked like?
I don't track many of these names very closely, but among the media, to talk about the index as a whole, it was looking a tad bit interesting. And among that, there are two names that are looking interesting. One is Dish TV, not exactly the print media, but it is looking interesting. It can test levels of 47, 48, given the breakout from inverse and shoulder pattern on daily charts with good amount of volume. So that is one where it is looking decent. Another is Sun TV, another one that is not in the print media, but yes, it's looking interesting. As long as trading above the level of 600, 610, it can be bought target of 640 with the stop loss of 595.
We're just under 1 minute left for market opening, so let's get across to Gaurav's top call for the day. Gaurav, what's going to be your top call?
It would be SRF without any doubt. The kind of data that is seen, the kind of breakout it is seeing, it can test levels of 2100, so that would be on my radar.
Okay, Gaurav, Bissa, just a quick thought. Nifty Bank 141 points higher. Would you trade it at 27,651?
I would not trade it. It's opening on a gap up node, and I don't like trading gaps. If you see any cool off towards 27,550, 560 for any reason, at those levels one can buy either a call option or one can buy futures with 60-70 point stop loss and target of 27,800. But around 27,650, I would not be interested.
Okay, stay on, gentlemen. Let's quickly check upon what the markets will do. We're just about to start trade. We'll start off in the green, maybe not as strong as what the SGX was indicating, but still in the green, which is not a bad sign. The world is, of course, a happy place. The Sensex, in fact, 247 points, so in line with what the SGX Nifty was indicating. The Nifty not so. The Nifty Bank too, in line with what the other benchmark indices are doing. Remember, yesterday it outperformed quite meaningfully, and therefore I'm interested in seeing what some of the banks are doing. But just before that, bring up the mid caps and the small caps and see what those are doing in the session today too. 0.5% higher for the benchmark indices, the mid caps and the small caps. Not really 0.5%, 0.25%, but not a bad start. Okay, let's get in the heat map and see what's moving and what's not. The gainers first. Infosys on expected lines, starting off about 1.5% higher. The data, the deal details are not known, or the buyback details are not known as yet, but it just brings about some positivity to that stock. Tata Motors, after gains yesterday, up in the green as well. Not quite seeing ICICI Bank out there in the top gainers list today, but Axis Bank is still there, up about 1% again after the move in the session yesterday. HDFC Bank, which was languishing yesterday, is up about 0.25%, but an overwhelming sense of green. Even though minor gains, but a lot of green on the screen at the start. Very little red. Bharti Infratel, in fact, starts off 1% lower. So maybe people bought a rumor and selling the news, or some profit booking after a meaningful run-up. But let's wait and watch. Let's give it some time, really. Let's not jump to conclusions. HPBP too starting off marginally weak in the session today. But overall, a lot of green, very little red. Not a bad start, though, you would have to say. What about specific pockets of strength and weakness? 3 large caps in focus. Well, I've discussed them already, but just bring them because each of these has a piece of news to them itself. Infosys, the buyback, IndusInd Bank ahead of the results, and Bharti Infratel after the analyst meet and the positivity that they gave out in that meet as well. So 3 large caps in focus. And then the broader end of the spectrum, sugar and sugar-related companies in focus. Big moves in trade yesterday. Praj, another couple of percentage points higher. So good start. Sri Renuka about 0.5% higher, and Balrampur Chini too about 0.5% higher. Praj is really the one that is really revving up. 10-year highs or 11-year highs now with this move. So good going really for Praj Industries. Last but not the least, the stocks that corrected in trade yesterday. Let's see what they are doing today. Growth Finance, well, 0.75% in the green. Bandhan Bank, about a couple of percentage points. So a bit of a recovery. Let's see if this lasts. Devina, what are you spotting?
Let's start off with some of the print media companies and the reactions to the ad rate hike of 25%. 16% for HD Media. DB Corp is the other one, and Jagran Prakashan is the next one. So 8% higher for Jagran Prakashan. DB Corp is up 7%. So all of them heavy gains coming in this morning. Delta Corp reports numbers today, so just focus on that one as well ahead of numbers. What's happening to that stock? So 1% higher. Real estate as a pocket, active active last few trading sessions. Some amount of gains given back into today's trade, particularly for the likes of DB Realty. DLF is still gaining, so about 1% higher for DLF. DB Realty is down 2.5% right now. Taking a look at what's happening to a Godrej Properties and Oberoi Realty, those two stocks should also come up on your screen. Godrej Properties up at 735, looking strong. Oberoi Realty again 456 on the stock, 1% higher. The likes of Sadbhab Engineering are up in the green. IDBI Bank, GMR Infra, Lakshmi Vilas Bank. Yesterday again, the smaller PSU banks started to get really active in trade towards the end of the session. Indian Bank, Lakshmi Vilas Bank, we're talking about all Syndicate, Union Bank of India, in all of these names looking strong. Indian Syndicate Bank though giving up a bit in today's session. You've got Praj Industries, which Neeraj already spoke about, that's looking strong. PTC India, Madhusudan Sumi, V-Guard and Eros International doing okay in this morning session.
Well, so not a bad start for the Indian equities. Quick thoughts. We already got a sense from Gaurav. Bissa doesn't want to trade the index. Gaurav, just a quick thought here. Infosys, which is starting off a couple of percentage points higher. Would you trade it?
The Infosys has immediate hurdle at levels of 700. And this is the level from where we have seen reversals coming in. So I would recommend buying on dips towards level of 672, 673. Keep a stop loss of 664, 665 on the upside. 695 can be expected. It's also the 100 DMA today, that the high that it made today, 685. So I think either you buy above the breakout levels or you wait for a dip. It's stuck in the range. I would wait for some more time to play a trade in Infosys.
Okay, Gaurav, we'll leave it at that. Thanks so much for joining in today and giving us your perspective. Really appreciate your time. Deven, final question really before we let you go. Between the three large banks that are revving up, ICICI Bank at life highs, Axis Bank too up about a couple of percentage points. They made some new hires, and yesterday SBI too was doing very well. So the corporate facing banks, which is your favorite and why?
So ICICI, I mean, for the timing remains, I think, relatively more clearer to me, because one, they are sitting on a good amount of liquidity. Two, they are receiving sum of money in the books, I think, which is more important at this point of time for further expanding the business. With the renewed thrust on the management side, I think the bank is probably having relatively more clearer focus, and overhanging situation is going away. So that is one. Monetization of some of the verticals, I think, going forward could possibly yield better balance sheet performance also at the same time. So from a perspective of looking at 1.5 to 2 years from now, and given the valuation, of course, I think at which ICICI is quoting, I think 1.5 to 2 years from now, I think this bank appears to be relatively more stable. Of course, continue to like, I think, the story within Axis too, but I think the ICICI at this point of time remains more stable. SBI too is a beneficiary, but however, I think the growth wise, if you look at it, probably ICICI would be better comparatively.
All right, Deven, we'll leave it at that. Thanks so very much for joining us with your views this morning.
Thank you.
All right, moving on then. Prateek Agrawal, CIO at ASK Investment Managers, is joining us on the show right now. Prateek, good morning to you. I mean, we're starting off the new year on a slightly positive note, no big bang moves. But what is the anticipation as we step into 2019, and the factors that you are anticipating in terms of volatility, global cues, our own domestic cues that will play out for the Indian equity markets?
Yeah, so beginning of the year, we are actually looking at more number of issues than I remember having looked at any other beginning of the year. So we start the year looking at US-China trade spat. We are looking at tapering continuing in the US and more geographies, including the Eurozone, to commence to tapering as we go deeper into the year. We are looking at elections in the Indian context and so on. So the number of issues that the markets will have to take care of during the year are significantly higher than the usual. And that said, while the valuations do seem to be more defendable than where they were last year, but overall we still believe they are at the higher end and the overall compounding that one should expect from the equity market would be a tad lower than the earnings compounding, so that some amount of valuation correction takes place. So those would be our thoughts. Overall, in terms of growth, global growth should be a tad lower than what we saw last year. US, the biggest economy, is close to full employment. So versus last year, very difficult to build a case of in core, it will be lower. China is already slowing. So the two largest engines of global growth are definitely slowing. So with that, if you build the outlook for commodities, one should expect this to be a softer commodity year versus last year, and which by extension then means that in the Indian marketplace, businesses which are users of commodity and have pricing power, so branded businesses, cars, etc., would have some amount of margin uptake, possible margin uptake. And then, if we try and build a theme as to where we are, or we would want to be focused, then, the space where we have a margin uptake, if we can complement it with, strong growth in volumes, I think that is the space that would stand out. It would be a narrow space. Most of the names would lie in the consumption basket, given that capex would not happen, simply because any company that corporate banks would be happy to lend are not actually doing a capex, they're simply acquiring somebody else. And government is focusing on, loan waivers, etc. So focus on capex will actually reduce, which then leaves you with a consumption play and financiers of consumption as being the main drivers. That is the space, frankly, where we are focused and we believe would sustain in a dicey marketplace that we foresee over the next year.
Prateek, good morning. Neeraj here. Happy New Year to you. And if that is indeed the thesis, then you should be a happy man, because I think some of those plays have fallen maybe slightly out of favor of the mainstream market and are available at more reasonable valuations than what they were maybe 6 months ago.
Yes, some of the names have done that, and that gives a good entry point in some of these names, yes.
Okay, interesting. The question mark though is why the belief of these companies doing much better than the rest of the market, wherein I hear a lot of people talking about how the capex revival or signs of it might bring about a change in the fortunes of, say, the capital good companies, for example, and it might be an area of reckoning for them, or maybe corporate facing banks, because while they haven't done too much in the recent past, the earnings recovery and the resolution of doubtful assets might bring about better numbers for them, and therefore the market might give them a higher preference than the favorites of 2017 and 2018.
Yeah. Sure. So, one, if you look at a news item that appeared a few days back, it actually pointed to new project starts, which is what a capex company would focus on, to be 14-year low. Okay, let that sink in. So, capex is not happening. What are the three large spaces where capex happens? Steel, power, maybe cement, right? Now, steel and power, the companies which are still interested in this space and to whom banks will still be okay to lend, are acquiring stressed assets. They are not creating new assets, generally speaking, and so also in cement. So, yes, capacity utilizations are moving up, etc., but as yet we don't see a big move in capex happening on the ground by Indian corporates in the listed space. yes, some bit of capex is happening from foreigners, so FDI is high, and that some part of it may be new capex, but most of that is also purchase of already established businesses, be it Flipkart, be it real estate, etc. If you look at corporate banks, yes, they will have or they should have a earnings uptick because the provisioning requirements going forward would be lower than what we have seen in the past, and in fact there may be some write-backs. However, their growth is also coming from retail rather than corporate. In fact, today's newspaper itself covers what an ICICI Bank would do going forward, and it clearly says that they want to focus on retail versus doing capex lending. So that is what it is. Yes, last quarter saw a lot of capex oriented businesses deliver very good numbers, but our conviction in the sustainability of the same is pretty low at this point in time.
Prateek, just want to get your sense in, when the IL&FS crisis happened, we saw the impact of that on all of the NBFCs. Do you feel that the full impact of that has been already felt in sectors like construction, housing, the small and medium enterprises, autos, or there is still some more left to go, and that could keep continuing till probably even mid-year or even in the second half?
So, even I would want to wait and watch. December was a terrible month across the board for, let's say, auto sales, a part of the market which was seen as a bellwether, pulling up hopes, pulling up the economy, etc. A few things happened in December. One, it is end of the year, so inventory cleaning happens, and companies which may have had a higher degree of inventories delivered lower numbers. Because the numbers we see are factory numbers, they are not what gets sold at the end channel at the showrooms. So that is one. Second, financing was less available. So if your vehicle is sold mostly in the cities, then you are less impacted versus if you were sold more in the smaller towns and villages. So that was the second thing. And third, this is end of the year model change period, and companies give discounts. So some companies which may have delivered better sales numbers may have given larger discounts as well, and vice versa. So, but that was a December effect. Now, if the same thing persists in January, then I think we have an issue at our hands. To some bit of demand impact, especially in cars, should be expected. Cities account for a large percentage of cars sold. We all know that, as you get space to drive, as highways get constructed, more number of cars get sold. But in cities, there is no place to drive. All cities without exception, and you find increasingly that even people who have cars take public transport to work and back. So deferment of decision making in automobiles is, I would say, almost definitely happening, anecdotally speaking. And but yes, we need to quantify the impact. And like I said, if the slowdown persists in the month of January, then there would be a concern building up there.
My final question, and that is on real estate. It's not a meaningful part of the market, but do you reckon 2019 could be a year of portfolios having real estate in their stride, because the numbers for some of the larger players and the higher quality players might start showing big time?
We have stayed away from real estate for a very long period of time, and I guess we would continue to do so. One or two investable names in each marketplace, I would believe, Delhi, Bombay, Bangalore. But that said, house sale intensity is not really increasing. If you look at the Bombay market, you are getting good discounts if you want to buy. So that is also happening. And the other thing that is happening is people postponing purchases to, when they see the building ready and they don't have to pay GST in an OC obtained building. It makes so much more sense to wait out for the project to get completed rather than to be buying when it gets launched. That changes the complexion of the game from being a very high ROC business, the house construction part. It is becoming a very, very average ROC business, and this is without taking the purchase of land or the over purchase of land that most developers have done. So I think we need to bake in the numbers. It's still time. It is still evolving. The big hope that was there in the real estate space was consolidation. Anybody who does not have a brand was just not able to sell anything at all. And hence, we are seeing move from, lesser brands, no brands to larger, more credible brands. But larger, more credible brands are very few. They are having their pick, and the consolidation is significantly slower than what one would have expected. So, yes, a trend. It will play out over a period of time, but I think it is going way slower than what people expected.
Okay, let's hope it quickens up, but Prateek, of course, wants to stay away from there. And interestingly, he's still sticking to his favorites that he had spoken to us on Alpha Mughals a few months back, which is consumers and consumer financing related companies as well. Prateek Agrawal, take a moment to thank you for joining in today and giving us your thoughts, and wish you and your team a great 2019.
Thank you.
Well, we'll talk about some of this, infrastructure, real estate, etc. on the other side of the break. We talk about the continued real estate slowdown with JC Sharma of Sobha Developers and whether there's a silver lining there. And road construction touched its highest pace in 4 years, but can NHAI meet its target for the year? We ask Vinayak Chatterjee of Feedback Infra these questions. Stay tuned to Bloomberg Wind Live.
What started out as a quest for good coffee has turned into a single estate specialty roast coffee connoisseur's paradise.
It was purely, this is something that we want. We're looking for good quality coffee.
Theirs is a story of starting something amazing and new and refreshing.
It wasn't just Matt and me who were taking this journey to change the coffee landscape in India, but it was actually going to start from the farms.
The face of coffee in India has seen a sea change in the last few years. And it's owed now in a small way to Matt and Namrata, the founders of Blue Tokai Coffee Roasters. Watch their exceptional story only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
The Union Road Transport Ministry is planning to opt for the rebidding of the second bundle of projects this time around under the toll operate transfer model after the highest bid received for the projects fell short of the floor price by about 750 crore rupees. Joining us now to discuss the reason behind the low bids and the government's road construction targets this year is Vinayak Chatterjee. He's the chairman and co-founder of Feedback Infra. Vinayak, thanks very much for taking out the time. Let's start off with that very question on why the response has been so tepid this time around for the road projects, and what is the likely reason that we are seeing such a big differential of the floor price versus the highest bid that we've got this time around?
It's not an easy question to answer, but I think the first round of the TOT bids was in some senses an extremely positive surprise for NHAI and the Ministry of Road Transport, because in TOT 1 against a floor price of what I broadly remember was in the order of around 6,500 crores, they got the winning bid at 9,500. And therefore I suppose people who are given the task of setting the floor price got over ambitious in the TOT the second bundle and set the price at a level which even before the bid, industry circles in the road sector were abuzz with conversations that it was possibly an artificially high floor price. So in a sense, it was not a surprise that the prices came less than the floor price. I would certainly place a larger weightage to the fact that the floor price was ambitious considering the circumstances and the specificities of the projects that were in the bundle. There is of course the overriding fact that the market was less enthused about the projects, the road stretches in Bihar and Bengal, which were considered difficult both from a point of view of toll collection ease, law and order, as well as the quality of the roads that were constructed. So maybe in retrospect, a lower floor price reflecting probably the reality on the ground would have not led to this bundle having to be, rebid.
Right. Just let's talk a little bit more about, while you're talking about the region or the places in which, the bundle is coming from and the possibility of growth is not as much out there. What happens now once it goes in for rebidding, and how do things change? Is there an anticipation that there could be a change in floor price and that could come off?
I have no data other than to speculate along with you. The fact is that as per bidding protocol, if the bids fall below certain the designated floor price, then in a sense it is an infractuous bid, because that is a bid condition that nobody can bid below the floor price. So if you bid below that, then obviously it's an infractuous bid, and as per all tenets of governance, it has to be rebid. Now, how it will be rebid, I have no clue.
All right. Let's also talk about targets that the government has set out in terms of achieving road construction targets. Closer to about 16,000 odd kilometers was the initial target at the start of the fiscal. Then it came down to about 10,000 by mid-December. By the end of December, somewhere closer to 12,000 kilometers is what was spoken about. The actual road construction is half of that. I mean, does that raise alarm bells?
But to my mind it doesn't, because I once again believe that the latest statistics that I have seen show that road construction in the months of in the preceding months, I forget whether it was December or January or maybe November, had touched a level of 26 kilometers per day. That by any standard of project execution anywhere in the world is an execution pace that is to be lauded and not criticized. It is true that Mr. Gadkari had announced a target of 41 kilometers a day. At that point of time, many of us felt and still do that it was an overtly over-ambitious and a stretch target. But it is when government announces stretch targets and then galvanizes its various arms to try and deliver on that target that you see this massive leap to 26 kilometers a day. So I don't think we should be critical about what the target has been achieved or not. But actually, to be frank with you, while it is always easy to criticize the government on 10,000 things, this is one case where I would actually like to praise the minister and all the entities concerned for having reached a level of 26 kilometers per day. And I wish them good luck to even, scale and cross 30 kilometers a day.
Do you think that there is a slowdown in terms of awarding new projects? I mean, there is that funding restriction nonetheless that we have been seeing. You've got costs overruns, delays of implementation that have been obviously the earlier headwinds and challenges within the sector.
There are two reasons. You will find that if you study the life cycle of project in road sector or project execution and project announcements, you will find that it follows a cyclical pattern. You have 2-3 quarters of very major assignments because a bundle of road projects get cleared for execution, which means to start construction, and that means that in the period prior, a lot of work has been done on the ground in terms of creating hurdles of utilities removal, land acquisition, permissions of forest and environment, giving out the tenders, etc., etc., etc. So currently, we are in a phase, I am personally aware, where there is huge pressure on project execution for the projects that were announced in the last period. At the same time, I am also aware that the government is working very actively on a set of greenfield expressways. Delhi, Vadodara, Delhi, Amritsar, Katra, Nagpur, Bangalore, Nagpur, Hyderabad, Bangalore, etc., etc. On a series of national highways and greenfield expressways, which would be ready for announcement, I suspect, by the close to the end of the first quarter of this year. So we are currently in a phase of very high execution pressure on projects that have of execution that were already announced earlier, and a phase where a lot of homework is being done to announce the next batch of projects, which are very large and very heavy. So that's where we are. So I think it's a natural rhythm and a natural cycle of the projects business, particularly in the road sector.
But how did you read into the data released by the CMI with regards to project announcements in Q3, which are at a 14-year low?
I did read that, and my analysis is as follows. So you have to break up project announcements into public sector and private sector. In the private sector, the infrastructure project announcements are normally always by the public sector or the governmental sector. And there my theory fits in that a large number of projects had been awarded and are now in execution. So the public sector is really not announcing any great new projects in the here and now. I expect after the elections that wave will come back. So far as private sector is concerned, the trigger is always capacity utilization. We are always watching capacity utilization to see that once capacity utilization on a sustained basis hits 80-85%, then the boards and managements of private sector companies decide on setting up new capacity. Now, it is true that in many sectors of the economy, particularly in capital goods and certain other sectors, the capacity utilization is still not reached levels where fresh investment decisions are being taken. Although there are sectors where demand growth has now reached very, very attractive levels. I speak about cement industry, I speak about construction equipment industry, I speak about construction materials. In these cases, the boards and managements of these companies have almost decided to get into an expansion mode. But net, the fact that in Q3, CMI has said that project announcements have been as low as 2004 would be a matter of concern, but you have to see it from the lens of large infra public sector announcements, and a clutch of many smaller private sector manufacturing capacities based on capacity utilization. So that's my take.
All right, while we've spoken about, the awarding of new projects, the delays, the timelines that we are seeing, and the sheer quantum of the target that has been achieved, is a key reason also financial closure for these projects and the difficulty of that in an environment like this today?
See, if we look back at the last 4 years or so, there have been pressures on financial closure on certain set of industries. For example, when hybrid annuity was announced in the early part of the current government NDA, there was a huge consternation amongst banks and lenders that we find it very difficult to achieve. We find it very difficult to lend to these projects because of these conditions. Then Mr. Gadkari and his people stepped in and they ironed out a lot of open issues with the banks, and the bulk of the hybrid annuities reached financial closure. Today we are seeing a similar trend in wind power, where a clutch of projects bid out by the Solar Energy Corporation of India, SECI, are awaiting financial closure in projects as far back as February 2018. So over time, as bunches of projects get announced, for various reasons, financial closure takes time. Right now, in the road sector, there aren't so many BOT projects which are awaiting financial closure because the bulk of them are either under hybrid annuity, which have got closed, or they're under EPC, which doesn't require financial closure. But certainly we are seeing a stress point on wind power projects. So it's a mixed bag.
One last question, Vinayak, before we let you go and we close out this discussion, is the angle of the pace of land acquisition for the NHAI. Now, they've targeted about 10,000 hectare mark for FY 2019. Is that achievable? Do you think that can come about? And then obviously if that is achievable, things start to slowly but steadily fall into place.
See, the dynamics of NHAI has changed quite a bit. A large portion of the roadworks in earlier years was expansion of existing alignments that did not require so much rigor on land acquisition. Two things happen simultaneously. We now have a higher proportion of greenfield alignments, expressways or non-expressways. Now, greenfield alignments by definition are far more land acquisition intensive than expanding or widening existing alignments. That's point number one. Point number two is that land acquisition is anyway a very, very tedious and granular process where small pockets of land with the state of land records as they are in the country have to be sorted out, public hearings have to be held, competent authorities have to give their sanctions, and then the process moves on. It's a very granular, very tedious process. And finally, the cost of land acquisition has gone up by almost 4 to 5 times because of the government and everybody else following the compensation norms of the land acquisition policy. When you put all of this together, you can see that the challenges for land acquisition are very clearly what you pointed to, that the challenges have increased significantly. And with these challenges, both of the price of land acquisition, the granularity, and the higher proportion of greenfield expressways, land acquisition is clearly a very, very challenging scenario. Now, how much NHAI or the ministry will be able to do or not do is very difficult for me to speculate. But to just say that yes, from all indications for companies like us that are in the road sector, I certainly know that they're attacking the subject very vigorously.
Vinayak, thanks very much. Really appreciate you taking out the time and joining in and sharing your views on this particular topic. That's Vinayak Chatterjee, Chairman and CEO and co-founder of Feedback Infra.